Welcome to what we hope will be the first of many such shareholder webinars organised by Phoenix Copper Limited. I'm Geoffrey Temple, a private investor into Phoenix, and make it clear that I am independent of the company. We have here representatives of the shareholders, posters from across ADVFN, LSE and Telegram. From Phoenix Copper, we have the VP of Investor Relations, Dennis Thomas, and the CEO, Ryan McDermott. The questions that we will have today have been raised by our shareholders, and I'm as interested as everybody listening and watching to hear their responses. For the shareholders present, please wave your hands if you have any questions. I'd like to start off by inviting Dennis and Ryan to tell us a little bit about themselves, how they got involved into Phoenix, before we get into the questions. So Dennis, why don't you start us off?
Thanks, Jeff, and good afternoon to everybody. Yeah, I'm Dennis Thomas, and on behalf of Phoenix, I'd like to welcome you all here, and thank you to Jeff for organising and volunteering to moderate the webinar. The first, as Jeff said, the first of many, I hope. By way of background, I'm a mining engineer who spent a good part of his career generating projects and working in the development of these new projects worldwide, and particularly for base and precious metals. That's been my great love of life in life, has been the generation of new projects. And back in 2011, in the course of generating some new investment opportunities for a large American client, they were particularly interested in getting into quality copper projects, and I came across the Empire Mine property. Anyway, to cut a long story short, we secured the property within Connex Resources at that time. And if you know what you're looking for, the potential size of the project, I always say, can be gauged by the alteration signature on Google Earth. And quite frankly, the Empire looked a very good bet even in those days. In 2013, Roger Turner and I formed Phoenix with a view to, if it became available, acquiring the Empire Mine as a flagship property for Phoenix. Well, and quite frankly, the rest is history, and I'm not going to bore you with the details. Fast forward to 2017, and Phoenix exercised its option to acquire control of Connex and the Empire project. And part of that discovery and development on my first visit to the mine, which was most impressive, quite frankly, when you see rocks, I don't know if you can see it like this. It's certainly that's one thing of the mine hill that you'll see are some beautiful specimens of particularly chrysocolla, malachite, the oxide minerals, and azurite. So that was the basis that we started. We were most fortunate, I might add, in the process of putting all this together, to find Ryan, to head our local team in Mackay. And maybe I can pass over to you, Ryan, and off with your own introduction and your own background and experience.
You bet. Thanks, Dennis. So I'm a geologist by schooling, born and raised in Idaho. Went to work for Phoenix in 2017 on the Empire project. Just coincidentally, my great-grandfather and my grandfather worked underground at Empire before World War II. And my career actually started with the predecessor company to Kinross in the Mackay area in the late 1980s. So going to work for Phoenix at Empire was like coming back home. Fantastic project. It's hard to find projects in a jurisdiction like Idaho, and particularly in a community like Mackay. Over half of the town I'm probably related to, but they're all progeny of miners from, pre-World War II days. So they all understand the importance of mining. They understand the economic impacts and the economic benefits. So it's really a pleasure to be there.
Thank you very much indeed, Ryan. Without further ado now, let's start to move into the questions then, and we'll proceed with number one, on the economic model. which is when do we estimate that we will generate our first dollar of revenue from production? Perhaps you can answer that, Ryan.
You bet. So the process design that we've developed will start with copper and zinc recovery on a heap leach. Typically with heap leaches, within 30 to 45 days of beginning leaching, we would sell the first metal. So first revenue, within a month or a month and a half of startup, which we anticipate and we're targeting for late 2022.
That's excellent. Good. Okay.
Someone has a question.
Yes.
I just want to ask this question. It's very basic, but I think for all mining projects, it's useful to know, because on the AIM market, we're used to having particularly startup miners in all corners of the world. And often they are paying quite significant royalties to the country that's allowed them in, and then taxes on top of that. So I think it's very useful right at the start to understand this project, to know what sort of royalties and taxes does WilPhoenix pay on everything it produces.
Excellent question. So we will pay standard federal and state taxes. And the state of Idaho, in addition to that, has a 1% mining tax. But if you look at life of mine, the effective tax rate after calculating depletion is about 9%. So it's really not too bad.
No, I mean, you compare it to, some of the projects that I invest in, the government are looking to take 40, 50% of the overall profits of the project. So it's, I think that's a really important point for investors to recognize.
This is a very favorable jurisdiction.
That's excellent. Good question, good answer. Thank you very much. So the next question is there any way that the startup could be brought forward?
Simple answer, no. We have developed a schedule that's based on regulatory guidelines, and we think that schedule is achievable. As much as everybody would like to see this start up faster, we don't want to miss something in the permitting and the plan of operations. So we're very comfortable with the schedule we have. Okay,
and that is to bring it on for towards the end of 2022.
That's the target, correct?
Okay, good. Thank you. Are there any questions regarding that? Any additional questions?
Okay. Well, I would just like to ask that obviously you've got an embarrassment of riches, really. That you've got the Navarre Creek, you've got gold, you've got cobalt, you've got copper, you've got silver. I mean, how are you going to juggle all of those? What's your sort of priority? And is it a question of trying to keep all the plates spinning whilst you concentrate on one, or are you looking to deal with them as separate projects and maybe look at different joint ventures, etc.? All those kind of questions. You can probably guess what I'm getting at.
Yeah, that's a good question. No, we have prioritized these projects. The flagship project is the open pit at Empire. That is our current focus and always will be. We're fortunate that the Red Star project, Navarre Creek, White Knob, Horseshoe, they're all within if you drew a circle 5 miles wide, all of those projects fall within that circle. So we can access them very readily from the same office in Mackay with the same team of people. And we can run most of those projects concurrently because of their location, their proximity to one another. But make no mistake, the focus is Empire. That's the most advanced project that we have. There's over 400 drill holes in that deposit. So that's really what we're looking at this summer. Red Star and Navarre, we will have plenty of time to drill it, complete geophysics, and again, we can do that from our base in Mackay.
And I think I'd like to add as well, Paul, the beauty of what we have. I've always said that we have very forgiving ore bodies in that they're polymetallic. So as we've seen over the last few years, the vagaries of the metals markets don't necessarily mean that, for example, if we were a gold producer and the gold price went down, we'd we'd have the floor taken away from underneath us. So there is the ability to be able to think on our feet while if there's any fluctuations in the market. So, you know, we can play that card very effectively.
Okay.
No,
We've got a
obviously,
question.
sorry, obviously, because you've got
Yeah,
all these projects.
let's pass on to Carlin.
Yeah, hi. A quick question. You've got obviously a large portfolio of assets, as Paul has described. And once you start going into production, you're going to be generating a lot of cash flow. And that's going to put you into a different position where you are today. Much stronger company. Not only will you have assets, but you'll have cash. Cash is king, as you know. So in order to maximize the value of, you know, or the medium-term value of the company and to grow the company beyond what you've indicated to the market requires you to upscale your exploration activity. And because you have that internally generated cash flow, okay, you will have the financial resources, and that will also require therefore additional operational resources. What would be the level of, say, you know, extra drilling activity and exploration activity that you can then undertake on your own terms, and what financial and operational resources does that require?
Excuse me jumping in here, but is this a question for you two guys? If you're happy answering it, please go ahead. But this may be better done by Richard. What is?
Or if you can answer it in a general sense.
Yeah, I think quite frankly, it's. I come back to saying what I was saying earlier on. As we go forward, it depends on the. I think a lot of it depends with the copper price, for example, going the way it is at the moment, and the demand for copper. Then there will be. We'll look at the markets and look at what cash is available and deploy it optimally. I think the word optimally being the word. I mean, we've got a lot of experience within the markets, and particularly with regard to exploration and development. So yeah, we'd put it where it's most effective at that time. And I think, you know, one would need a crystal ball sometimes to find out exactly what the prices are doing. But I mean, with the copper we're producing, for example, it's much needed, and all the wisdom is for increasing copper prices. So yeah, we'd play it accordingly, in my opinion. And for more precise details, yes, I think I'd toss that one towards Richard.
Okay. No, thank you very much. Let's move on to the third question then, which is in the RNS about the economic model. The project pays back in under 2 years. What is the return with today's metal prices?
Yeah, so if you look at our economic model, it's based on $3.60 a pound copper, and that is correct, Jeff. The model shows that we would repay our initial capital in 2 years at that copper grade. At today's prices, over $4 copper, we do get to a point where we're paying that initial capital back in 12 months or less. So we are very sensitive. This deposit's sensitive to copper price, obviously. But does that answer your question?
Yeah. If I think that's good. Let me throw it to Dennis as well to see if you wanted to add anything on there, you know, about the impact of increased copper price.
Well, the beauty at the moment is that it goes straight on the bottom line. Our operating costs remain the same, so quite frankly, it's pure profit above that $3.60 according to the original model, and you can probably work out the maths that the price has gone up more than 10% since that model was created. So yeah, it augurs well.
Yeah, that's excellent. So knowing the tons of copper we're going to throw off and the price of copper, you can then work out the increased profit. It's as simple as that.
Yes.
Thank you very much, Dennis. That's a very positive answer. That's great. Okay, let's move into geology now. Could you describe the geology in the territories in layman's terms and explain what makes this interesting to Phoenix?
You bet. Well, all indication are the geochemical and geologic information points to the empire and all of the surrounding mineralization sourcing from a porphyry system at depth. And I don't know how familiar people are with that, but porphyry systems around the world are quite famous for sourcing copper, zinc, gold, silver, tungsten, all kinds of metals in rather large mining terrains. Empire is no different. We believe we have a moly tungsten porphyry at some depth, and that has sourced the copper and zinc, gold, silver that we see at Empire. It's the source of the high-grade sulphide veins that we see at Red Star and further north into White Knob and Bluebird. And very likely the gold that we see at Navarre Creek, which is some 4 miles away, more than likely came from the same porphyry. So this is a large system. It had a good heat engine, lots of mineralized fluids, and most importantly, we have rocks near the surface that are very amenable to mineralization from a porphyry.
Excellent. I understand, Dennis.
Just add in a funny sort of way, I always consider it plate tectonics on steroids, really, on a continental scale where these porphyries and these mineralizing systems come up through faulting and basically volcanic rocks, magmatic activity bringing the metals up to near surface. And if you know what you're looking at, you can look at a map of the world and predict where these porphyries are likely to exist. For example, in the Rockies, we've got a 3,000-mile long chain of mountains where mountains are building, and then it extends to a 4,500-mile stretch down into the in the Andes down to the tip of Tierra del Fuego. So they're the sort of places that you would look for it, and quite frankly, Mackay, the location around Mackay and the Empire Mine is very much the center of the dartboard as far as I'm concerned. And you just have to look at the mines around there, Bingham Canyon, the porphyry, which is a 4-hour drive. We've got Thompson Creek with the Molly porphyry there. You've got the super volcano at Yellowstone, which is not far away. So you've got a lot of magmatic activity there, and the Mackay area, the Empire area is, in my opinion, sort of prime porphyry mineralized territory.
Excellent, very good. Any questions for that then? Let's move on. Can you explain why Empire open pit has a range of metals quite different from Red Star, which is less than a kilometre away?
Yeah, good question. It's actually not a different range of minerals. We have the same minerals and same metals at Empire and at Red Star. The difference is concentration of those metals at the locate. Empire is a copper zinc with gold and silver. Red Star is silver and lead, highly concentrated. We still have some copper and some zinc at Red Star, just not nearly the concentration of silver and lead.
Okay,
it's basically the same. It's the same ore body. It's just been faulted down just between the north end of the Empire pit and Red Star. So effectively, you've got, in fact, going north from Red Star, you've got let's say a much wider range of minerals, because the copper part of the skarn ore body is in fact lower down. So you've got the whole of the copper right down into the tungsten area from Red Star northwards beneath you.
Excellent. Good. Okay. Paul, question.
I guess that's leads to the obvious question. You know, porphyry, as you've indicated, often it's, you know, very deep deposits, goes down a long way. I mean, how, you know, are you planning on drilling into that? I mean, I know I've been involved in investments where they felt there's been porphyry, and it's often been quite a long process of proving up porphyry deposits. You know, what are your views on that? It's likely obviously to be huge, but the timing of proving it up could be tricky.
No, if you look at this deposit as a fruit tree, we have the open pit polymetallic deposit near the surface. That is the low hanging fruit, and that's what we're attacking right now. In time, we will get to the roots of the system, but we're focusing on what's readily available right now, and that's Empire, Red Star, Navarre Creek.
Good.
Yeah.
And
All in good time.
Yeah, and I mean, at this stage, to put it in perspective, one of the reports, Nigel Morn reports, which you hear quoted from time to time, he does state that the system itself, the potential mineralized system, has probably been less than 1% tested, exploited and explored at this stage, which puts it really in perspective to how big this system probably is, and the porphyry beneath it.
Yeah, well, I remember speaking to an analyst, I thought it was maybe Paul Mycreast, about another company, and he described their system as being a bit like an antler skull, and that they were just exploring the tips of the antlers at the moment. And I guess it's a similar sort of analogy to the fruit tree that Ryan said.
Yeah, I think it's certainly my history that I've seen a number of juniors try to exploit a porphyry without necessarily the adjoining mineralization, and it becomes, as you say, it can be years and years. I've seen porphyries take 30 years to get off the ground. They can be that big, and they consume vast quantities of exploration and drilling capital, particularly. Whereas we're in a very good situation that we can work our way in, I think, to do the eventually to get down to the porphyry in good time. But that's I would suggest a good few years off yet.
But you get profitable with the open pit and the low hanging fruit, and that pays for everything else. So
absolutely, yes.
Great,
yeah.
Fantastic.
Stepwise approach, excellent. Okay, the next question is essentially the same as the last one, but it's for Navarre Creek Gold Zone. What is the different, or what is the divide between the Empire Pit and Navarre Creek?
It really has to do with rock type in that instance. Navarre Creek is, excuse me, gold that's hosted in quartz-rich volcanics, versus Empire, which is hosted in a sedimentary terrain. The volcanics that we see at Navarre Creek are similar in chemistry and characteristic to those that we see in northern Nevada that host some of the large Carlin type deposits. There is no direct connection between Empire and northern Nevada. The similarities are simply with the rock type. Quartz-rich volcanics are permeable. They're an excellent host for hot mineralized fluid. And we see all of those characteristics at Navarre Creek. That's why we're so excited with that project.
So I'm going to jump straight into the next question. So if I understood correctly, when you talked about northern Nevada, there is no link between Phoenix, the structure of Phoenix, sorry, the structure of Navarre Creek and the Carlin deposit in Nevada.
That's right. The similarity is in the type of rocks, particularly the host rock for the gold mineralization is similar between Nevada and Idaho.
Yeah, yeah. Did you want to add to that, Dennis?
No, it's same setting, and to the original Carlin mine. As you've seen with our results that we announced just recently for the Navarre Creek sampling, we're getting very similar and very good geochemical initial surface sampling results, which are entirely in keeping with what the original Carlin Trend mines have given. And when you think about it, you know, there's probably somewhere between 88, 90, 100 million ounces of gold have already come from the mines on that trend, and they're still producing.
Hang on a second. 88 to 100 million ounces of gold, and if we say take an average price of $1,000 an ounce, that means
that's a lot of zeros.
$100 billion of gold from the Carlin Trend already.
Yeah, a lot of zeros.
And they're still drilling.
We're still mining.
Impressive.
Yeah.
Paul, yes.
Can I just ask about Carlin Gold? In terms of processing that type of gold, is it a more it's obviously a very established technology, but in terms of cost, is it sort of cheaper, more expensive than people that are following higher grades in sort of, you know, seams, etc.? Is it a more complicated or simpler or more expensive, as I say, sort of process, or is that just a bit of a red herring?
No, great question. The magic of northern Nevada and the gold deposits there are they are low grade but very high tonnage. Because they're high tonnage, you get a lot of economy of scale when you mine them. It's not uncommon to visit mines in northern Nevada that move 40 or 50,000 tons of ore a day. So there's an economy of scale that you gain with that. Processing is fairly inexpensive. So you can be highly profitable with grades at less than a gram per ton because you're moving so much material.
Interesting.
And just thinking, so it sort of leads to the obvious question that you have all of these projects within a relatively small area, and obviously you have a time scale as to which ones are easier to process first, but presumably the long-term plan is to have all of the infrastructure on site that can process all of these metals.
Yeah, there'll be different processes and different process designs, but the idea is to recover all the metals that we see that are of economic grade.
And that itself, though, will make, you know, there will be some real opportunities, I would have thought, to save money through having such a relatively small geographical area with so much just different opportunities within it.
Yeah, the fact that we can service all of these projects from a single office, from a single location in Mackay, that saves a tremendous amount of money.
Yeah, good.
Excellent, excellent. Okay, I'm going to move us along now because time is moving. I'll go on to questions about resources now. The resource table shows that the inferred category is roughly 50% of the value of the measured and indicated categories. What sort of percentage of the inferred can we move over to measured and indicated?
No, we really won't be able to answer that until we start excavating in the open pit, but it's not uncommon to move, 50% or more of inferred once you start mining. But the inferred material is inferred due mostly to its grade and location in the deposit. The inferred material we have is lower grade. It occurs around the periphery of the deposit. So, once we start mining, the economics of the inferred material may change.
Understand.
We'll just have to wait and see.
Yeah, you're already there. You're already mining, so the capital costs are installed. Yeah. Okay,
Correct.
Thank you. Let's go on to question number 9. Would it be reasonable to assume that the Empire open pit mine will have not just a 7-year life, but might work for many years?
We sure hope so.
Okay. Dennis, did you want to add to that?
No, I think, anybody that's worked in mining and in this situation is very well aware of the fact that the plan that you've seen in our economic model is a snapshot for right now. As we develop a mine and the mine carries on, then new ore is found in the process, the natural sort of development of the mine and the production from the mine, and so it would be very reasonable to assume it will go on a good few years afterwards.
Excellent. Good answer. Thank you. I like that. Local issues now. What are the permitting requirements in Idaho as impact our projects, and what are current estimates for delivery?
Another good question, Jeff. The permitting requirements in Idaho are both federal and state. They're all based on environmental law. So basically the government has created a checklist or a series of boxes we have to check as we go through that statutory process. It begins with collection of environmental baseline data, which we began doing in 2017 and is complete. Next step is submission of a plan of operations and reclamation plan to the regulatory authority, which we'll do in June of this year. And then that process is dictated by mandatory timelines, mandatory deliverables, all of which we'll follow. We believe the regulators will do the same thing. And that'll get us to a late 2022 start.
Okay, that's good. Anybody with a question about that? In which case I'll move on. I'm going to save a little bit of time now by combining question 11 with the last question, question 14. So we'll move now to question 12, which is, can you supply some detail on the steps between now and bringing the open pit into production, assuming finance is in place? What's going to happen?
We're going to finish the engineering design, finish the process design, submit a plan of operations to the regulatory authority for record of decision permitting, and then obviously the construction piece. Construction will be a 6-month process in good weather. It's pretty straightforward, favorable ground, and excellent community support. That's really what this comes down to.
Excellent, very good. Okay, any other questions on that? In that case, move on to number 13. What are the plans for the 5 to 10 year development of the company? Which projects will be prioritised? In particular, what is the plan and timescale for targeting the deeper sulphides?
Dennis, go ahead.
Well, we've covered a good piece of it. I mean, plans for the 5-year development, get the Empire mine into production, get, I think, next priority into Red Star, do the exploration work into Red Star. And again, if there are economic deposit, if we find an economic deposit, which we're very hopeful of, particularly with regard to the silver in Red Star, look at developing probably an underground operation at Red Star, and in the process, obviously, get into the Horseshoe and Windy Devil portions of the extension. You've got to remember that we've got 5.3 kilometres of skarn along that whole trend, and quite frankly, the exploration of Red Star northwards is actually quite a major undertaking in its own right. And then, of course, we've got Navarre Creek, again, which is sitting on, if you like, easily accessible, can be accessed from the surface, drilling, that will be next. And then I think we start to consider, depending on what happens with those, obviously the underground sulphides. And the underground sulphides, we would look at along that entire 5.3 kilometre section of strike length. We've got enormous potential, and really we're just planning to get it moving using the cash thrown off by the Empire open pit to get us started.
Okay, well, I've got my own question, but first of all, Richard, you had your hand up earlier. Did you want to give a question?
It's really actually back to the last question about the Empire open pit mine. What do you see as the biggest risks to any time delay in any of the things between now and the opening of the mine? Are there any regulatory hurdles that might be a time delay or whatever else?
The regulatory process in this country is very straightforward. Again, the guidelines we look at as a recipe. We check boxes as we provide deliverables to the regulators. The fact that we have over 3 years of baseline data collection by an independent third party makes us very confident that we're not going to run into any environmental problems. So to answer your question, really the only outlier would be the involvement of non-government organizations, and that's always a risk in mining. The advantages we have, the depth to groundwater is over 1,600 feet. The Lost River Valley does not drain directly into the ocean, so there are no anadromous fish, no salmon, no steelhead. In Idaho, it's all about water, and we just don't have any water issues in the area of the Empire. So we're very confident that we're not going to have any major stumbling blocks.
Okay, thanks very much for that.
Good. I've got my own question for Dennis now, if I could, because I picked up earlier, you said, and I've read this before somewhere, you read that we have only 1% of our resources exploited or explored.
Correct.
But today in the Empire pit, if I remember the resources and the statement by Richard Wilkins recently, a post, was that there are over $1 billion of assets today.
Yes, comfortably. Yeah.
Does that mean what I think for how big our potential can actually grow?
Well, it says yes. I mean, in a word, it means that there is immense potential there. Yeah. We have enormous potential, and how that is added depends on the nature of what we find when we do our exploration and our drilling. So and that really is it in a nutshell. It's great potential, and we've got to. We're lucky. Somebody mentioned low-hanging fruit earlier on. We're fortunate in this particular situation that we have the relatively low-hanging fruit. We had, for example, we spotted it when we first took the project on. We were looking. It's a brownfield site. It's never been a greenfield exploration site. It's been a brownfield site, and we've just spent our time, if you like, reinventing the wheel with regard to the resources that we knew were there. So it's very good. And in all of this, one of the things I'm just thinking of is, if I may say so, is this stuff which I don't know whether you can actually see it, but that's cobaltite, and we've got our cobalt claims up north in the Idaho Cobalt Belt. So
where's the sample from?
That's from Bighorn. That is
from Bighorn. What's the percentage cobalt?
Bighorn. I was with Ryan. I think he may well have bashed it open and gave it to me.
It's extraordinary.
And cobalt, of course, at the moment is sitting there at $50,000 a ton. So that's an asset that we really haven't covered at this stage.
Paul,
just when you talk about the historic site. I mean, I think I've read somewhere on your website that when the mining was going on there back in the pre-war years, when Ryan's ancestors were underground, and that the grades that they were pulling out were often around 8% copper that was going to the mine head. I mean, that's pretty good, isn't it? I mean, it's bigger. It's
exceptionally good. Yes, yeah, and the U.S. mines inspector at the time reported. I think, if I'm not mistaken, Ryan, was it between 6 and 8%, and one of the reasons was the lighting was so bad that it had to be that sort of grade, believe it or not, that they could actually see it. That was the Mark I eyeball was their grade control, and the other fact as well. At the end of the mine, they were starting to get into high grades of tungsten. So that the last shipment that actually went from the mine was in fact a tungsten shipment, and they were getting in excess of 4% WO3 from the mine and the scheelite.
Does all of that lead one to the conclusion that actually, in terms of what you would actually produce when you're mining, is likely to be of a better grade than one would predict when writing these sorts of reports before mining, if that question makes sense?
No, and the reason for that, we have, like I said, over 400 drill holes in the oxide deposit, so we know within a hundredth of a percent what our overall grade is going to be. That's been very well tested and very well proven. The material that was mined prior to World War II was sulphide copper at depth. It's basically the roots of the system, or the roots of the fruit tree I talked about before. We will get to some point exploring that area, and we do anticipate those kind of grades at that depth, but different ore characteristic, different style of mining, and entirely different processing.
Okay, that's very helpful. Thank you.
Okay, any other questions before we move on to the last one? And I'm going to combine number 11, which is, why does the board feel that they are so well placed to bring Phoenix's various projects to fruition, with the next one, which is, why would I choose to invest in Phoenix over the other available mining plays? I think these two questions, actually, I could have put them together at the beginning, but I'll do that now. Who wants to answer that one first?
I'd be happy to answer. Guys, we are very fortunate that we have a mineable geometry here in a first world jurisdiction. We're in the United States, favorable tax. in a community that supports what we're doing 100%, you get that, it's hard to find that combination of positive factors anywhere else in the world. And look at Kitco right now. Copper's over $4 a pound. It doesn't get any better than this.
And I might add, Ryan, that you're right. We get local support. We also get top level support from the administration in Idaho, from the governor downwards, and everybody right from the very beginning. When we first went to Idaho and on our first visit, we had great encouragement from the governor at the time, and we've had nothing but support from the local Mackay community. They've been wonderful. You know, we've got a high demand for our products, immense potential. And the other thing I would say as well, I think we've got a world-class team of professionals. We've got, you can have the best ore body in the world, as certainly I've seen in a lot of my experience over the years, and you put a bad team in there and they can ruin the ore body, and everybody will lose their shirt. So it's importantly that we got great professionals, and they don't come better than Ryan, if I may say so. Very importantly as well, if I just may say so, we've got a superb shareholder base. We've had great support from our shareholders, been supportive right the way through. In fact, all the stakeholders, the people of Mackay. What else do you need to make a success in a superb project, and a wonderful, a good team to run it, and a supportive shareholder base? And I might add that we're always available to talk to anybody. So anybody watching this, if this conversation that we're having at the moment inspires any other questions, just pick up the phone and ask us. You know, we're always happy to talk to anybody at any time.
Okay, well, I don't think I could have heard a better answer in terms of myself as a shareholder listening to that and wondering why I was invested in Phoenix Copper. So we've come to the end now. I want to thank you very, very much to Phoenix Copper. I think it's been a very, very interesting and well worth doing session. And I would encourage shareholders to participate in this in future events, and for the company, of course, to do it again. So any final comments from anybody? Any other fellow shareholders want to say anything?
Well, I'd just like to thank you for taking the time to, you know, meet with shareholders and to answer our questions so openly. That it is it's much appreciated.
Oh, good.
And I would second that.
Thanks, it's our pleasure.
Yeah,
Thank you, guys.
Thank you very much indeed. And thank you, fellow shareholders, for joining in. We look forward to seeing you on the next webinar in a few weeks' time. Goodbye.
Thank you, Jeff.
Thanks, Jeff.
Thanks.
Bye-bye.
Bye.
Bye-bye.